Hey everyone, happy Monday. Thanks for coming back to my channel or watching this on IGTV. I appreciate it. I'm back with another market update this week, and I hope everyone is surviving this heat. It has been awful. It seems like it came a little bit early this year, and I'm not all about it. And kind of ready for it to cool off, but it's only June, so that's not going to happen. If you live here, you know how I feel. If you're thinking of moving here, don't let that scare you away, but I will tell you right now is not our best look. So just keep that in mind. Anyway, some updates for you. First of all, if it's your first time to my channel, thank you for coming. Make sure you subscribe. I post new videos every Monday with market updates specifically about Phoenix real estate. And I post new videos on Fridays. That's either a neighborhood tour or some sort of buyer and selling tip. So make sure you subscribe so you can keep up to date. Anyway, let's start off by talking about something that is affecting construction in general, not just in Phoenix, but lumber prices. Lumber prices have been so high over the last year, and the good news is they just came down 20%. So that's awesome news. The bad news is that they're still up 239% from last year. So what else is new? But this has really been affecting construction, both for custom and for, subdivision builders, some of those big builders, because they've had to increase their prices due to the lumber prices and then also shortages with other appliances, building materials, and that kind of thing. So at least this is going down, but it's definitely still high. To give you an idea, lumber prices usually were between $350 to $500 per thousand board feet, and now they're at $1,200 per thousand board feet. They peaked at $1,700 per thousand board feet. So that gives you an idea of how high they really have been. But at least it's coming down. Hopefully that continues and we can get a little bit of ease on that front. So let's talk about our CMI. Every week I talk about this. If you are new and you don't know what this is, the CMI stands for the Cromford Market Index. It comes from a subscription that I have to the Cromford Report. They analyze data in the Phoenix MLS on a daily basis. They've created this mathematical equation to determine supply and demand factors in our market. They look at historical trends, they look at seasonal factors, and they assign a value to a normal market for Phoenix, which is between 90 to 110. Anything below 90 is a buyer's market. Anything above 110 is a seller's market. So that's kind of how we measure our supply and demand in the market. And the CMI is also the predictor of price appreciation, because our appreciation here in Phoenix follows the CMI. It's just a lagging trend of the same pattern the CMI takes. So that being said, our CMI is sitting at 428.3. It's gone down again. It's been going down significantly since March, when it peaked in the low 500s. So now sitting at 428, we are almost 100 points down from our peak. I think we peaked around 515. So definitely a trend that it has been going down. Supply is sitting at 25, which means supply is 75% below normal, and our demand is sitting at 106.9. So that is 6.9% above normal. Demand came down slightly. It was 107, like maybe 0.2 last week. So that's come down a bit. Supply has been increasing, which is great for us to see, but that's also one of the reasons why things are changing so much in the market, and our CMI overall is coming down. So one of the questions I wanted to answer today is price appreciation coming to an end? And the answer is, I don't know, but I can tell you it is going to soften. Our CMI has come down so much that the seller's market is weakening. That's a thing that's actually happening. And that means price appreciation is going with it. So I'm not saying depreciation, just be clear on that. I'm just saying that our appreciation is not going to be where it has been. So eventually we're going to start to see appreciation at more normal levels, like maybe 10% instead of like 36%. Just keep in mind, like a normal appreciation rate is about 2 to 3% per year. And we've been seeing 20%, 30% appreciation just because of everything that's been going on. So if price appreciation softens, which it will, it's okay. It's not going to ruin the market. We're going to be fine. But I want you to know that, because if you're thinking about buying a house and you buy today, you may not get as much equity in that house as quickly as you would have if you bought 6 months ago, because price appreciation was so much more significant 6 months ago. Same thing as a seller. If you're thinking about selling, you may want to sell now because you've gotten the price appreciation that you wanted, or you could wait, but how much longer are you going to wait and how much higher is it going to go up? So my point is, price appreciation is going to come to an end for how significant it has been. It is not depreciating by any means. To give you an idea, it took us 95 days for us to fall from the peak of where we were with the CMI in March to where we are today. And it only took us 67 days to get there. So we clearly accelerated much faster on the way up than we have been on the way down. And that's a good thing, because if we were falling quickly, we would be concerned that there are some issues. And so this slow decline is really kind of a balancing out of having so much pressure in this market of lack of supply and high demand that we're finally starting to level off and come down from that crazy level. So overall, it's a good thing. But if you've been thinking about selling your house, you just want to keep an eye on it, because we may be getting out of the point eventually where any house can sell and there's multiple offers and everything's above list price. Those days will eventually come to an end, and how soon, I don't know yet, but things are definitely shifting. To give you an idea of inventory levels, so inventory levels have started to recover. We have seen more listings come to market, which is great news for buyers. They've come back from the extreme lows, and the number of listings under contract are also falling, which is interesting. So now we're starting to see more homes come to market and fewer are going under contract. So to give you an idea, Phoenix is up 53% in terms of new listings from February. All of these numbers are from February of this year. Mesa is up 106% since February in terms of its new listings, and Scottsdale is up 32% since February for new listings. So that's great news that we have more supply in those areas. Let me put it in perspective though. These increases put us here. So Phoenix has 809 listings. A normal amount would be 4,327. So more listings, yay, but still so low compared to what we should have. Mesa has 255 listings. Normal is about 1,500. And Scottsdale has 499 listings. Normal is about 2,200. So still significantly low, but we've seen an increase from the extreme low of February. So that's good news. I think that's all I had this week, but I just wanted to make sure that I was explaining where we're going with the CMI and how that affects price appreciation. Things are definitely changing, like I said, and how long it will take and what will actually change, it's hard to know, but I do know that as the CMI continues to go down, that is going to weaken our sellers market, as it already has. So if you have any questions and want to throw them in the comments, go for it. If you want to chat with me specifically about real estate here in Phoenix, you can set up a time to chat. I have a link below where you can get on my calendar, and that's the easiest way to book some time with me. Or feel free to call, text, or email anytime. I'm happy to chat with you that way as well. Well, thank you so much for watching. And again, if you have questions, you know where to find me. Hope everyone stays cool this week. I'll stop complaining about the weather, and hopefully I will survive. I'll see you guys next week.